who's doing it in Shanghai, who's taking deliveries in London. All of these entities that are doing that are highly sophisticated, incredibly wealthy, and have the ability to not only stand for delivery, but to run logistics. Like in February, who took 2 million ounces of silver out of the COMEX? Where did it go? 2 million pounds of silver, 39 million ounces. Who took 2 million pounds of silver and ran logistics for that, and where did it go? But this is a pattern that is not slowing down. Shouldn't take me but a second, I hope. Here we are. In April, silver withdrawals have been monstrous since the start of the year. 135 million ounces in Q1, plus 4.236 million ounces so far here in April. These amounts do not include the 8.260 million ounces issued and stopped on the COMEX in the April delivery month so far. And in gold, we've seen 18,647 gold contracts, or 1,864,700. Would that be right? Yes, that would be. Ounces of gold. I mean, in both cases, you're just under $1 billion 2 weeks into the month. By the end of the month, just like every other month, we'll be well over $1 billion delivered. And if we look at February, we're at 36 or 37 or 8 million ounces left COMEX, 160% of what was delivered. You're beginning to see it increase. When you talk about a silver to gold swap, again, how many people are waiting to do that same trade? So instead of doing it all at once, it would be better to, like an onion, layer it as the price starts to get into a range that you're comfortable with. Start layering your trades. These are very, Donegan, I've never seen more challenging, difficult to explain and understand markets than we have right now in a market that should be very straightforward. And I think that in and of itself is an indictment to the system, where things are happening that we don't normally see, all the way from deliveries that continue unabated. We've never seen that before, to margin increases. We've never seen that before, to selling junk silver at $2 under spot. We've never seen that before, to bid prices dislocated the way they are. We've never seen that before. I don't know what that really portrays for the future, but I will tell you that I think we are a long way from seeing the top in gold and silver. And what you did see was a flushing out of all the speculators. And now the metal is held in very strong hands with very low open interest on COMEX, with deliveries that continue every single month. Here we are again in April. Let me just give you the April numbers here real quick. The April numbers, which we're only 2 weeks through, are, bear with me, shouldn't take me but a second, I hope. Here we are. In April, silver withdrawals have been monstrous since the start of the year. 135 million ounces in Q1, plus 4.236 million ounces so far here in April. These amounts do not include the 8.260 million ounces issued and stopped on the COMEX in the April delivery month so far. And in gold, we've seen 18,647 gold contracts, or 1,864,700. Would that be right? Yes, that would be. Ounces of gold. I mean, in both cases, you're just under $1 billion 2 weeks into the month. By the end of the month, just like every other month, we'll be well over $1 billion delivered. And if we look at February, we're at 36 or 37 or 8 million ounces left COMEX, 160% of what was delivered. You're beginning to see it increase. And this has happened in the face of falling metals, rising interest rates. It doesn't matter. These big players, they don't care. But the mainstream media wants you to think that's all that matters. Oh yeah, the Fed's not gonna cut rates, so that's bad for gold. But they don't talk about the fact that for a year when rates went from 0 to 4%, gold still skyrocketed. The largest increase of rates in history in terms of shortness of time, and yet gold still took off. The media is getting it all wrong. And when the media is telling us that, well, war creates higher energy, which creates higher CPI, which creates more inflation, which means the Fed can't cut rates, that's bad for gold. It's just a bunch of crap. It really is. And the big money shows you that by how much they're taking in possession. Look at China. In the month of February, when silver was getting its teeth knocked in, silver than in the history of recorded inventory, supply-demand numbers, ever. In the month, as the second largest producer in the world, they're importing the most they've ever reported since they've been keeping records, ever. So price is a tool of misdirection. The big money uses it and the shaking of the trees, the deleveraging of the trade to their advantage. And they stand for delivery when everyone else is looking elsewhere. And that is exactly, I'm sure it gets old hearing that. I get it. But the fact remains the same. It's happening. And you're going to get to that little by little by little, then all at once moment where there just isn't enough inventory to be delivered, where the market starts to behave more. I guess the easiest way to say it in an analogy is focus less on the casino floor and look more at the vault behind the casino. Don't focus on the casino, focus on the vault. And the vault numbers are telling you what's really happening. The casino isn't, and it's blurring with the beeps and the sounds and the bells. And I hope that makes sense. I just think that the deliveries are all you need to know. As I've said every time I'm on your show for the last few months, it's all that matters, because these people, not just the central banks, whoever the hell's doing it here in the United States, who's doing it in Shanghai, who's taking deliveries in London, all of these entities that are doing that are highly sophisticated, incredibly wealthy, and have the ability to not only stand for delivery, but to run logistics. Like in February, who took 2 million ounces of silver out of the COMEX? Where did it go? 2 million pounds of silver, 39 million ounces. Who took 2 million pounds of silver and ran logistics for that, and where did it go?
Before we wrap up, let's zoom out for a second, because what we're watching right now is bigger than one headline, one candle on the chart, or one day of price action. This is not just about silver going up 50 cents, or gold pulling back after a strong move. This is about something much larger happening in the global system. We are living through a period where trust is being tested everywhere. Trust in governments, trust in central banks, trust in currencies, trust in debt markets, trust in the headlines, and honestly, trust in the idea that the old financial system can keep running the same playbook forever without consequences. And that is exactly why gold and silver matter. A lot of people still look at precious metals and say, why would I care about silver? Why would I care about gold? They just sit there, they do nothing, they have no yield. That is the old argument. But the world we are moving into is not the same world that argument was built for. Because in a world of rising debt, geopolitical instability, currency debasement, weaponized trade routes, sanctions, proxy conflicts, fragile supply chains, and central banks trapped between inflation and recession, the thing that just sits there starts to look very powerful. Gold does not need permission. Silver does not need a bailout. Neither one needs a central banker to reassure you on television. And that is why every serious conversation about the future of money eventually comes back to hard assets. Now think about where we are today. Global tensions are not fading away. They are multiplying. The Middle East remains a pressure point. Europe is still dealing with long-term strategic instability. Asia is becoming more economically and militarily competitive. Energy corridors matter. Shipping lanes matter. Semiconductor supply chains matter. Food security matters. The dollar system matters. And every time one of these things gets shaken, markets start repricing risk. That repricing of risk is where gold usually gets the first spot. Gold is the monetary metal. Gold is the one central banks understand. Gold is the one they quietly respect, even when they publicly act like fiat is invincible. But silver is different. Silver is the metal that lives in two worlds at once. It is monetary, but it is also industrial. It is history and future at the same time. It is old money and modern technology in the same metal. That is what makes silver so interesting, and frankly, so explosive when momentum finally builds. Because silver is not just a shiny rock. It is used in electronics, solar infrastructure, industrial systems, advanced manufacturing, medical applications, and more. So when the world talks about green energy, electrification, reindustrialization, military tech, grid expansion, AI hardware, and supply chain security, silver is sitting right in the middle of all of it. That is why silver bulls never really go away. They may get mocked, they may get early timing wrong, they may have to sit through painful consolidation, but the core thesis keeps coming back because the metal keeps mattering. And let's be honest, silver has a personality that gold does not. Gold moves like a king. Silver moves like it just drank 3 espressos and saw a breaking news alert. Silver is calm until it isn't. That is why silver drives people crazy. It can look asleep for weeks, and then suddenly it moves like the market remembered all at once that above ground supplies are tight, demand is real, and the paper game only works until confidence starts slipping. That is the part many casual viewers miss. Most people only become interested in silver after it already made the move, after the breakout, after the headlines, after the FOMO starts, after the mainstream financial channels begin pretending they always understood the story. But real positioning usually happens when nobody is excited, when the comments are quiet, when the chart looks boring, when everyone is distracted by the next hot trade. That is how these markets work. And the geopolitical side only makes this more important. Every new conflict, every new sanction regime, every new currency settlement outside the dollar system, every new shipping disruption, every new defense escalation, every new energy shock adds stress to the financial architecture. Maybe not enough to break it in one day, but enough to weaken confidence over time. And markets run on confidence. That is the key point. The system does not need to collapse tomorrow for metals to matter. It only needs people to slowly realize that the system is not as stable, not as neutral, and not as durable as they were told. That is when gold becomes a signal. That is when silver becomes a story. And that is when retail investors, institutions, central banks, and everyday savers all start looking at the same assets from different angles. Some buy gold because they want security. Some buy silver because they want leverage to the same macro trend. Some buy both because they do not want all their faith sitting inside digits on a screen backed by policy promises and political incentives. And can you really blame them? Look around. Governments keep spending, debt keeps rising, currencies keep getting diluted, wars keep threatening trade, politicians keep promising stability, and ordinary people keep noticing that their money buys less than it used to. That is not conspiracy. That is lived reality. This is why gold and silver are not just investments to many people. They are a response, a hedge, a form of skepticism, a statement that says, I do not fully trust the system, and I want something outside of it. Now, does that mean metals only go up? No. Does that mean silver cannot be volatile? Of course it can. Does that mean gold cannot correct? Absolutely not. But zoomed out, the bigger picture is what matters. Precious metals do not need perfect conditions. They need persistent stress, and the modern world is delivering plenty of that. That is why, on this channel, we do not just stare at price charts in isolation. We connect the dots, because silver is not trading in a vacuum. Gold is not moving in a vacuum. Markets are reacting to debt, diplomacy, war risk, central bank behavior, inflation expectations, real yields, industrial demand, and public psychology all at once. That is why one random headline can move these markets. That is why one central bank statement can change momentum. That is why one geopolitical flare-up can turn boring metals into the most interesting corner of the market overnight. And this is where the memes almost write themselves. One day the mainstream says, nobody needs gold anymore. Next week, central banks are stacking it. One day people laugh at silver holders. Next week, they are posting rocket emojis after a $2 move. One day, analysts say inflation is under control. Next week, your grocery bill files an official complaint. That is the clown world element of markets. You can almost picture the meme. Fiat currency after another trillion in debt spending. I'm tired, boss. Or this one. Silver investors after waiting for months and seeing a 4% move. Everybody stay calm. Everybody stay calm. Or the classic energy of the metals crowd. They called me crazy at 22 silver. They called me lucky at 32 silver. They called me again at 40 asking what to buy. That is the emotional cycle in a nutshell. And if you want a few tweet-style lines to flash on screen during this segment, here are some that fit perfectly. Gold is not chasing the news. It is pricing the loss of trust. Silver is what happens when monetary anxiety meets industrial reality. Every empire prints. Every market pretends. Gold remembers. Paper promises are infinite. Real metal is not. Geopolitics is bullish for uncertainty. Uncertainty is bullish for hard assets. Central banks buy gold while telling you everything is fine. That should tell you enough. Silver does not move when people are comfortable. It moves when comfort breaks.